Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, February 22nd, 2023. Real quick, tomorrow I'm actually going to be leaving for Atlanta in about an hour, and I have some minor surgery I have to get done tomorrow, and I'm going to be out of commission all day. Odds let's just say a video report coming out are probably not that good. But I will, yeah, what I'll try to do is I'm going to try to get the regular report out earlier. I don't have to be there until 9:30, so I'm going to try to wake up early and get the morning notes out and maybe just do a combination with the report right in it, just so you guys have something. But really, nothing's changing. If you remember in the morning notes, I said I was expecting some really, really sloppy market where we are going to be going up and down. And what I was looking for was a bullish divergence to form because we had a little one here, but it really wasn't. But here you can see we had a move up. This brought our momentum indicator up, and from there we made a lower low. So this is a legit, bullish divergence forming. And I'm still hoping we get down to this, to the 39.50, so we could at least run with two-thirds of a position. But if it takes off, really, the bulls, they're going to have to get it above this 40.16 to see a reaction trade, probably up to the 40.60, 40, the 40.45, 40.60, up to these moving averages. I believe there will be sellers waiting right around that 40.50 level. So maybe we can, we'll see what's going on. If we see any little minor sell signals, maybe we'll just manage that third of a trade instead of just holding on. Because if you remember, we were, holding on to the short trade from here, and we just saw these massive spikes going, and it stopped us out. So I mean, it was very easy to be able to take profits here, even though it didn't reach my threshold. So if it gets up to this major resistance, I may take half off. I'm not 100% sure. I'll let you guys know. But this is really the major line in the sand right now. I can even take this and just move it down to here, and you can see it lines up with price support as well as the moving averages. So it's going to be a hard line to get through. If they do, I believe we'll see a short covering up to the 41.16, and then that will bring in this inverted head and shoulders pattern that I've been showing you for quite some time. So things are starting to line up. I don't know if they're there just yet, but we're starting to see cracks in the foundation, meaning that just like when we were up here and we had the Nasdaq heading one way, the Dow was heading the other, S&P and the Russell 2000, they weren't all running up at the same time, and that's your warning sign that they're running out of steam. Because it's like I've given this analogy before, where an engine, all the cylinders have to be running. It can go further without one cylinder or two, but eventually that engine's just going to seal up, and it's going to move, it's going to break down, and you're going to either go down, or if it's going down like this. And today the Nasdaq and Russell were pretty strong. The Dow was weak, and the S&P finished down 6 points. So we're starting to see a crack in the engine on the downside here. Doesn't mean it has to make the low, but the thing is that I'm starting to see reasons why to start expecting the low. And whether it comes at the 39.50 or we got to come down to the 38.87, I'm going to let the market decide on that. I think if it doesn't hold this level, 39.28 is going to be probably a magnet, and then it's going to be down to the 38.88. But so if the bulls can get above the 40.17, then we're coming up to the probably most likely the 40.58 level. If the bears can take out this 39.50, then we're probably heading down to the 38, the 38, 39.21, possibly even down to the 38.88. So that's really about all I have. The 15-minute chart, we have, really nice looking buy signals here where you can see it's very defined. And so that's it. So don't be scared here as far as looking to buy. I do believe that we're etching out some type of short-term bottom, or it could be an intermediate term bottom, and we run up into Woody's high date, and then from there, when the failure hits, we'll be short again. But The thing that I'm taking, away from this is when we were up here, we were looking short, even though that we got unlucky with this trade and we got these massive spike ups on nothing with the what the Fed was saying, but the algorithms that were just pushing it, higher on this. We were looking short. We weren't looking to jump in with the bandwagon at 92%, saying that we're going higher. When we were down here, we were looking long. When we were up here, short. So the predictive analytics model is working. The tape has been a little crazy, but this is, the downside target that I've been talking about since up here was the 39.50. And honestly, we would have stayed in this trade if we would if this would have got up to the 4200, because if you remember, that was the short trigger. We would have been filled up, and I really wouldn't have been all that concerned about things because we would have been averaged in, at a decent price. So now we're starting to layer in. I do believe we have a 300 point move back to the upside eventually. I don't know when it's going to start, but the thing is, we're going to be up here testing these highs, and with a real good shot that we are going to, that, hang on one second, I'm just getting my charts straightened out here. With a real good shot that we can make it up to the 43.27. And then from there, like I said, we want to see the time period because we already know when the low date is, when the high date is expected. So we're going to be switching, camps when everybody's getting bullish on this market, and everybody that's looking for, the next bear market to start or the next bull market, they're missing out on some great moves. And like I've been saying, I'd rather take 10, 15, 100 to 200 point moves and let the market do what it's going to do. I mean, that would, you're talking about massive, massive gains, and the ones that we're getting stopped out on are very minimal. I mean, the price was going in our right direction, but we just got kind of unlucky with a wick or a spike higher before lower. So let's see what plays out tomorrow. You can see right here as well on the daily, the 40.04. This is what needs to get up, and we have this gap at 40.89. So with that, have a great day, and like I said, I will get the report out in the morning. No guarantee on the nightly report. So have a great day, and I'll talk to you guys in the morning.